This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. Across Bloomberg platforms, I'm Carol Massar. Tim is off. He'll be back tomorrow. In his place, Matthew Miller, a devoted fan of our broadcast.
I am a longtime listener. Very excited to be here. I've only got one contact lens in.
So what does that mean?
So I might just be reading like this every once in a while.
It's always something with you, isn't it?
I'm going to put the other one in during the next commercial break.
Okay, you have some time. We'll make sure
there has been some really exciting developments in this Netflix Warner Brothers deal. And I said last week, I said, wow, they have a $5.8 billion breakup fee at Netflix. I would want to get that broken up and then take the Paramount offer.
Exactly. It's really fascinating. So we're going to dig into it. It's really the fight over the future of Hollywood, and it really has gotten a little bit nasty. So we're going to get into it. I will say, in terms of the trade, folks, we're pretty much near our lows of the session. It does feel like, Matt, that they are looking through what's expected to widely be a Fed cut on Wednesday. So I almost feel like they're looking at, what does the Fed say about 2026?
Yeah, 68.31, the level right now in the S&P. So we're about 60 points away from an all-time closing high. We were only 20 points off this morning, and we were gaining at the open. So a turnaround. Then with most industry groups falling, only IT was holding us back from further losses. All
right. Well, Kevin Gordon over at Schwab is going to be with us to talk about the markets. We're also going to get into the changing of the guard over at Berkshire and perhaps at JPMorgan. I am fascinated by Todd coming into JPMorgan. So we'll talk about that. And then we're going to get into the world scrambling for all things rare earth. It's all coming your way over the next 60 minutes. Let's get a check on the trade for you on this Monday. Let's toss things over to Alexis Christoforous. She's in for Charlie Pellet.
All right. Thanks, Carol. Yeah, Warner Brothers Discovery has some deciding to do as shareholders mull a hostile takeover bid from Paramount Skydance. The $30 a share cash offer values Warner Brothers at over $108 billion. That includes debt. The bid compares with Netflix's offer of $27.75 a share in cash and stock, with Paramount's offer being for all of Warner Brothers. Netflix just wants the Hollywood studios, HBO, and the streaming business. Both bids, though, raise significant antitrust concerns, both companies laying the groundwork to win over the White House and regulators. On Wall Street, we have traders waiting for the next catalyst, which is the Fed's final meeting of the year Wednesday, where Wall Street is betting on that third rate cut of the year, and will be listening closely for clues on possible future rate moves in 2026. The Dow Industrials near their worst level of the day now, down more than 300 points at 47,640. S&P 500 down 40, backing away from that near record high. NASDAQ Composite now down triple digits off 110. And Apple's chip chief, say that fast 3 times, Johnny Strugi, is squashing departure rumors, telling staff in an internal memo that he loves his job and team at Apple. Bloomberg had reported over the weekend that Strugi told Tim Cook he was considering leaving the company. We know Apple has been battling recent executive departures. Once again, stocks lower across the board. S&P down 38. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's the Bloomberg Business Flash. Back to Carol and Matt.
Apple's chip chief. Apple's chip chief.
I love
Apple's chip chief. But I had to say it really slowly. Alexis, thanks so much. All right, folks, it is a battle among, I feel like, the old and new media titans. A deal we thought was
left
agreed.
And right.
Yeah, very much so. And a deal I thought was agreed to. And then we got a hostile offer coming in today. And we've got the White House's commander-in-chief, Matt, definitely watching. I mean, the target is Warner Brothers Discovery.
Yeah, it's interesting that President Trump said there may be too much market share here, which by itself, between Netflix and HBO Max isn't a surprise. But then he said he's going to be personally involved in whether or not this gets through regulation. So I think that should be a bit of a concern for Ted Sarandos, who has tried to do everything right, I guess, of late. But really, Netflix is viewed as this globalist, kind of left-leaning, dare I say, woke, company and entity. And it wants to take over this asset that Donald Trump sued to block Time Warner, AT&T, this deal in 2017. So
way back when, right? Remember that. All right, so let's get to it because we've got our own Felix Gillette, Bloomberg News Media and Entertainment editor. He's the author of It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. He's right here in our New York studio. And then out there at our Bloomberg Intelligence headquarters in Princeton, New Jersey, Bloomberg Intelligence Senior Media Analyst, Geetha Ranganathan. This is such a cool roundtable. So let's start, Felix, with you. The details. We got the hostile takeover bid from Paramount. It does top Netflix's offer. I thought this was a done deal.
Not necessarily. Actually, it does not top Netflix's offer because in the Netflix offer, they're spinning off the cable assets, right? So they're not getting the CNN that Trump probably wouldn't want them to have.
Yeah, they're both saying that they have the higher offer, and it depends on how you value those cable networks.
Is there a deal that's better, that's preferred, Felix? Let's start with you, and one more likely to get regulatory clearance?
I mean, they're both saying that they both, they're pointing at the finger at the other, saying, oh, that will never get regulatory approval. Paramount is saying essentially that, Netflix has over 300 million paying subscribers. If you combine them with HBO Max, you're going to have over 400 million. It's too much concentrated power in the streaming competition. They have a lot more. So that's Netflix's argument, is that it's not just, the competition isn't just between streaming networks at this point. It's competing for people's attention in the living room, which includes things like YouTube, TikTok. And in that world, they don't control that much attention share.
Which is a fun argument, but I mean, if this were just a technocratic DOJ decision, they try to take the narrowest view possible. So they're not going to include YouTube and TikTok, even if, Carol, you spend a lot of time consuming content on those things. Yeah, but so do I. In fact, I often choose it over Netflix, Prime, and HBO. But that's not how the DOJ traditionally views these kind of things.
Well,
so,
Geetha, how do they view it, and what's more likely to get done? What makes more sense? Or listen, we're going to be talking about this in the new year.
Yeah, it's really anybody's guess right now, Carol. So traditionally, yes, they have taken the most narrowest definition possible. But I think the government also realizes that this whole video marketplace is rapidly changing. I mean, Netflix has been the biggest disruptor of the video marketplace to begin with. It's streaming disrupted traditional TV. Now, what Netflix is worried about, and this is how a lot of investors are kind of viewing this deal, is does Netflix actually think that they can be disrupted by short form entertainment? And that's exactly the point that, Felix was bringing up. Do we have to broaden the market? And, people will argue, yes, we do, because if you kind of look at just share of online video viewing, Netflix and HBO Max combined actually have a lower viewing share than the dominant force, which is YouTube.
I got my math, by the way, from you this morning, Geetha. So Geetha pointed out that the Netflix bid is $27.75, plus you add about $4, which you'll get for the spinoff of the cable assets. It gets you to basically $32. Okay. That's a little bit above Paramount. But Geetha, if Warner Brothers Discovery, because David Zaslav wants to get as much money as he can, right? If they somehow get broken up with by the FTC or the DOJ or whatever, and they get the $5.8 billion from Netflix, and then do the Paramount deal, which it seems like President Trump would be much more in favor of, does that end up giving them more money than anything else?
It absolutely does. And, this whole bidding war, I mean, the one person who's really enjoying this, I think, should be David Zaslav and, the Warner Brothers Discovery Board. I mean, we started, Matt, at $12. That was, on September 12th. And this is where we've ended up. I think the big worry today, and especially as you kind of see the Netflix stock trading, is Netflix really going to be forced to come in with $30 a share? Because you just kind of look at the optics of the deal. Paramount seemingly having the better offer, although the deals are different. But just for a first look, it looks like they do have the better offer. So I think investors are really concerned right now about whether Netflix will have to bid up. And that's an even better situation for David Zaslav. So he's laughing, all the way to the bank here.
By the way, at the Screen Time event, Carol, you and Tim were out in California, right?
You want to go there?
Yeah, because I thought you guys did great coverage, and Lucas had a fantastic event. And David Ellison gave an answer to the question about his family's closeness to President Trump.
We have a good relationship with the administration. And look, I think if you look to that, I do believe other things that have been rumored about, right, are very large-scale players that could potentially create monopolies, obviously, in the ecosystem. And again, I think when you look at the lens of consolidation, for us, I'll keep going back to it, it's always, how do you create long-term value creation? How do you put yourself in the position to produce more content, not less? And how do you ultimately build something that is better for the consumer?
All right, so that is Paramount Skydance CEO David Ellison. He talked about at Bloomberg Screen Time. That was back in October. So Felix, come on back in here.
Yeah.
I mean, we also have Affinity Partners, the private equity firm led by Jared Kushner, who's, of course, the son-in-law of the president, part of Paramount's hostile takeover bid for Warner Brothers. So do they have an advantage? It seems like a lot of things merging that they might have an advantage.
They've said they have an advantage, and having the president's son-in-law as part of your bid is usually a pretty good sign. But at the same time, we see that, today Trump came out on Truth Social and, complained about the Ellison's management of CBS News in 60 Minutes because of an interview where he was criticized on the most recent episode. So these things can be somewhat fickle. And let's not forget that Paramount has, sort of antitrust issues also. Those, if the deal went through with Paramount, that's 2 Hollywood studios that would be combined, 2 streaming services, not as big as Netflix, granted. You'd have multiple news outlets, CNN and CBS. So they have plenty of overlap, and in some ways have more overlap than Netflix and Warner Brothers.
Felix, can I ask you, though, about, you cover the entertainment industry, right? I was talking today to Michael Wolff, he of MTV, previously and now Activate, and he says that the content creators or the creative community, let's say, is much more in favor of the Paramount bid because, when you listen to David Ellison's full interview with Lucas Shaw, they seem really focused on creating good, original, solid content, like not having AI make sequels of marketing products. So is that true that that Hollywood wants Paramount to buy it?
I think David Ellison has been out there making that pitch. We really support the creative community. Look at all these concerns already.
He and his sister have grown up watching all the movies.
And
he's making them.
Mr. Top Gun, he loves the movies.
It's also expensive, though, unless it does really well.
They're so rich, though.
And, you have people like James Cameron coming out recently and expressing concern about Netflix, saying that basically if you look at Netflix's history, they've been very hostile to the notion of long theatrical releases, that this would be kind of the deathbed for Hollywood movie theaters. Ellison's
the man who brought us Avatar that uses a lot of technology. I'm just saying, but go ahead.
But saying, hey, we want to see this on the big screen. You need 100 days in theaters exclusivity for this to be worthwhile. And you're kind of a sucker if you believe Netflix is really going to do that in the long term. Their business is providing entertainment for people at home.
It's a pretty convincing argument.
It's interesting stuff. Hey, Geetha, save 40 seconds for you to wrap up. So I don't know. Does this go to? Are we in a third round? Comcast is out, right? So
Comcast is out, yes.
So what's the timeline we're looking at here?
10 days. So the tender offer expires in 20 days. The Warner Brothers Discovery Board has 10 days to respond to Paramount to see how they want to proceed with this whole tender offer. But they have confirmed receipt of this unsolicited tender from the Paramount Skydance people.
Am I remiss to ask, does David Zaslav have a job after it with a really good pay package?
He doesn't need one. He's going to be so rich.
All right. To be continued.
I'm sure that we'll still be talking about David Zaslav after this. Don't you worry.
Just fine.
I'm sure. Bloomberg News Media and Entertainment Editor Felix Gillette. Check out his book. It's Not TV. Also, of course, Bloomberg Intelligence Senior Media Analyst Geetha Ranganathan. All right, media definitely top of mind in today's trading session. In fact, Paramount Skydance is up about 7.5%. We've got Warner Brothers Discovery up about 3.25%. Netflix is down about 4.2%. The other thing top of mind, no doubt about it, Matt, is the Fed decision. And that may already be factored in when it comes to, if you look at kind of the equity trade today. So I want to see
it's at the bottom of my mind.
It is. Well,
really, the Fed decision's at the top of your mind? They're going to cut.
I do.
I saved you 3 days.
Oh, my God. All right. But we're going to get... All right, just put him aside for a second. Let's bring in Kevin Gordon. He's head of macro research and strategy at Schwab Center for Financial Research. It's like... I don't know, keeping cats in control here. Kevin is here right in studio. Kevin, though, is the cut already priced in? And is it all about kind of what we get in terms of the summary of economic projections and whatever commentary we might get for the new year?
Well, yes. I think if you look at the WERP function on the terminal and then compare that to...
We love that function.
Yes, pricing, for December, actually relative to the equity market, if you look at it over the past month, both of those have been neck and neck. So, I would say it's fully priced in the sense that, every time the probability of a cut has increased sharply, the market's done well and vice versa. I think beyond that, one of the reasons I think that we're probably not going to see as many cuts next year is because the inflation backdrop, and we're putting out our outlook at some point later today, but I think that the inflation backdrop is going to be a little bit trickier in the sense that there's probably some upside inflation risk from tariffs that are expected to stay high, which have already put upward pressure on goods prices, but also fiscal stimulus coming from the big, beautiful bill. And I think still even if it's a wobbly, but still relatively resilient labor market that keeps people spending on a month-to-month basis. If you add all of that together and put it into an equation, I still think you have upside inflation risk. Plus, from a personnel standpoint for the Fed, you have to keep in mind that 2 voting members rolling onto the voting committee are the heads of the Cleveland and the Dallas Feds, and they've been leaning much more hawkish recently. It's Beth Hammack and it's Lori Logan. So I think that needs to be taken into consideration when you think about, especially the emphasis that has been now pushed on individual member commentary. That hasn't been the case up until maybe the past couple of months, where we've been paying so much attention to what each individual member has been saying. Now there's much more focus on that. So I think for those reasons, you probably don't get as many cuts next year as maybe some people have been expecting.
A narrative around that. What do you think, Matt?
I mean, it's we're looking at, with the WERP function, getting down to a terminal rate of 3% even, basically, right? Between 3 and 3.25 right now. So that's moved up a little bit. And as we hear so much about the economic growth that we're expecting next year, as we hear so much about the stimulus we're going to get from one big, beautiful bill, I just wonder if it's going to be hard to even go that low, because inflation, if you look at CPI, it's going the wrong direction, and it's 50% over the Fed's target.
Yeah, we're averaging closer to 3%. That seems to be, more like the floor. Even if you don't go, because it's not our expectation that you go back to anything akin to 2022 or 2023. I mean, getting close to, 8-9% on CPI, barring some major shock, is just really not in the cards.
But we've been there, so this only 3% still hurts.
Well, but exactly. So
because
I think
prices haven't gone down, right?
Yeah. And you're now 4.5 years of the Fed being above its target. I think at some point that has to come into the equation, and it'll matter in terms of how they set policy. So really, I mean, this is just them getting closer to neutral, what they think of as neutral. If it happens to be the case that inflation pressure is reaccelerating and they're maybe too close to neutral, then you can maybe start talking about a hike. I think it's still a little early for that, but you just have to keep in mind that they've been now so far above their inflation target for so long, and labor has essentially been at target almost the entire time. I mean, 4.4% for an unemployment rate. Yes, it's risen over the past year, but it's been number 1, gradual, and number 2, consistent with a fully employed labor market.
30 seconds. So what does this mean for the equity markets? I mean, if there's earnings, if there's an economy that's growing, if the labor market doesn't fall apart?
Well, the earnings picture just by itself, I mean, if you look at every sector so far, there's expectations that you're going to get pretty solid earnings growth for all 11 GIC sectors in the S&P. Only 3 are expected to have earnings growth that is slower in 2026 relative to 25. So that in and of itself just shows you that it's not just a couple of sectors or even a couple of industries that are carrying the market higher from an earnings standpoint. It really has broadened out. So we think that from an index perspective, maybe it's not as great because if you don't have the mega caps contributing mostly to the gains, then the index performance might not look great, but you could have relatively healthy breadth under the surface and participation that could mean for maybe a better year for equal weighted relative to cap weight.
Thanks for coming by.
Thanks for having me.
Really appreciate it.
I wish we had more time. I have more questions.
I know.
But not about the Fed on Wednesday. Not about that.
Kevin Gordon, head of macro research and strategy at Schwab Center for Financial Research. Coming up, we're talking about getting ready for Warren Buffett's retirement. That's next.
2:21 on Wall Street. I'm Alexis Christoforous, and traders are hitting the pause button on the stock market's recent rally ahead of the Federal Reserve's final meeting of the year. Traders growing anxious about next year's interest rate path. The Dow Jones Industrial Average down 277 points. The S&P 500 down 36. NASDAQ giving back more than 90. Bonds have been on the back foot of late amid jitters over the pace of future rate cuts and expectations for a divided divided FOMC decision this week. We've got the yield on the 10-year at 4.16%, 2-year yield at 3.5%, and the 5-year yield at 3.7%. We kicked off a new trading week with yet another big deal. IBM buying Confluent for about $11 billion, including debt. It is one of IBM's largest takeovers and a major bet on enterprise software that artificial intelligence tools need. Shares of Confluent up now nearly 30%. IBM shares up about 0.5%. And we've got NVIDIA's stock up a bit more than 1% right now. Semaphore reports that NVIDIA will soon be allowed to export its H200 chips to China. Commerce Secretary Howard Lutnick is said to support that plan. Once again, stocks lower across the board with the Dow down 262. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's your Bloomberg Business Flash.
All right, Alexis, thank you so much. Well, change is afoot at Berkshire, at JPMorgan Chase. There's kind of a connection between the two. We want to get to what you need to know. And with us is Sri Natarajan, Bloomberg News Chief Wall Street Correspondent right here in studio, along with Bloomberg News U.S. Insurance Reporter Alex Rajbhandari. First up, I want to talk about Berkshire Hathaway. So, Alex, talk to us about these leadership changes that are going on. It is like the company getting itself ready for what happens post-Warren Buffett. I mean, he's already announced his retirement, right? But once he's kind of officially off the leadership at the company.
So what we know is Greg Abel is taking over next year in January. And this morning they announced a slew of new appointments and some departures as well. The big one, and the one that everybody's talking about that we're going to talk about today, is Todd Combs, who was one of the two stock pickers for Buffett, along with Ted Weschler, and they were managing with Buffett this mammoth 280 billion stock portfolio. So he's gone. He was also the CEO of Geico. He's been doing a good job there, and analysts have been praising the turnaround at Geico that's been struggling in recent years, but gaining grounds in the past quarters. But that leaves a question mark as to what's going to happen to the stock portfolio and who's going to manage it, because Buffett no longer in the picture, still as chairman, but not at the helm. That means Abel's going to do it with Weschler, but that's just two people for a big portfolio. And that's a big topic for, Buffett watchers and Berkshire fans and investors, because they look at where the investments are going.
Is it fair to use the term exodus, or even worse, brain drain? Right? If Warren Buffett's leaving and I didn't get the top job, I'm out.
So this morning it hasn't been only about departures. There's only been some appointments of people that were not in the lights so far, but have been elevated to bigger roles. So that's important to point out. But yes, what you say, this raises the question as to how many people we want to work with Abel going forward. And there was an analyst this morning who put out a note right after the appointments to say that he expected more turnover going forward, because it doesn't have the same cachet to work for Abel than to work for Buffett.
Before we get to the JPMorgan, why did Combs leave Berkshire? How long was he there? A while.
He had been there for more than a decade.
Okay.
It's not been said exactly why he's leaving, but he had deep ties with JPMorgan, so that might be an explanation.
Also, I'm sure they wanted him. I mean, as you say, he was in charge of a massive portfolio. That guy must have been sought after on Wall Street. But just to touch on what's happened at Berkshire, it's so weird if you put up the shares versus the S&P. From April, the S&P takes back off again, right? Obviously, we had the Liberation Day dip.
Right.
From April, Berkshire Hathaway shares just come down. They've done, it's a mirror image of what the S&P has done. What is the concern about Berkshire Hathaway? Is it that Warren Buffett's finally leaving? Is this key man risk?
Well, there was talk when he announced he was retiring that there could be a Buffett premium that would evaporate. That could be supporting that thesis. There's also a lot of other questions. I've reported on the earnings in recent quarters and the softening of the economy in general.
I was just going to say, they play big time into the economy.
Right, exactly. And so not to say that the concerns for the economy are translating directly into the concerns for Berkshire,
right.
But there's been some softening of the top line growth, and analysts have been, voicing some concerns about that for the future. The company has had a very rare sell rating from an analyst recently because of all the headways coming the way. So, yeah.
It's a big change,
Definitely.
for a company so identified, obviously, with its founder. All right, so Todd Combs leaving Berkshire after a decade. Let's bring in Sri Natarajan, because JPMorgan has hired him. Talk to us, there was a relationship there already. There were ties. Tell us about what this news is about. What does this do for JPMorgan, and why is it happening?
Well, Jamie Dimon has been spending a lot of time talking about this national security initiative. You know, of having heard Jamie Dimon over the years, especially in the last 12 to 18 months, he has been talking about the geopolitical risks. He's been talking about the need to be independent and not dependent on other countries. And he has been putting money where his mouth is. They've talked up this $1.5 trillion financing commitment in this space. That is in any industry where, critical supply chain, electric grid, anything where you would look at it and say, this is important and crucial for America. He's saying we have to make sure that we're not reliant on any other country. So in addition to that financing commitment, which is about a 50% increase over what they would have anyway done, is what JPMorgan says, they're also putting about $10 billion of their own balance sheet capital as direct equity investments. And that's where Todd comes in, and he will be in charge of overseeing that investment. He's not an alien to JPMorgan. For nearly 9 years, up until this announcement, he was on the board of JPMorgan. When he joined the board as a 40-something, he was the youngest member of the board. And I checked this morning, as of the time of his departure, he was still the youngest member on the JPMorgan board.
Which is why I know I tease, could it have something to do with succession planning? Does it? Possibly? I mean, this is a guy who's going to have a direct line to Jamie Dimon on not just this, but other strategic issues, if you will, at the firm. It just... I don't know.
Look, it's a fair question, and I know I rolled when you asked that question initially.
Me too.
It reminded me of my daughter's eye rolls.
I will give you a reasoning for that. Is at this late stage, if Jamie Dimon had to turn to someone outside of the JP Morgan stable to find a successor, in some ways that would be considered a failure for Jamie Dimon, right? He's been there for 20 years at the top. Yeah. You assume that he's built a strong enough bench that he can pick from anyone. But look at what he did.
He left Citi, or was kind of pushed out, came to another firm.
Which is why we don't remember much about who was the predecessor to Jamie Dimon. Jamie Dimon certainly does not want to be forgotten. So again, if he were to go this route, it would be completely out of left field, which is why it's not the number one predicted scenario, even though, because you asked the question, we will put it in the list of possibilities.
Oh, nice. You got a name in the list.
I got the eye
Good job,
roll.
Hey, speaking of big names, the advisors to Todd Combs on this strategic investment group are, masters of the universe. Paul Ryan, right? Condoleezza Rice, Robert Gates. Those are just the Washington names. Jim Farley, Michael Dell, who just gave one of the biggest gifts in world history. These are Ann Dunwoody, huge names.
Isn't Jeff Bezos also?
Jeff Bezos, good point. Also an important guy.
You missed the most important name on the list, Jeff Bezos.
Well, for me, Jim Farley is the most important guy.
Fair enough, you're a car guy.
Bread is buttered on.
But I will also tell you why I'm talking about Jeff Bezos, because there's another Todd Combs connection here, because you will remember a few years back, Berkshire, JPMorgan, and Amazon set out to, shall we say, solve the healthcare problem in the United States. And the connecting factor in those discussions, or in that venture, was Todd Combs. He was critical to that mission. Of course, about 2 to 3 years in, they disbanded, and they realized that healthcare is a harder problem to solve than just 3 successful corporations taking a swing at it. But they did make a go of it. And if you consider the top of the house of those 3 firms, Warren Buffett, Jeff Bezos, Jamie Dimon, and Todd Combs in the mix, he clearly knew these people well. And that also is another reason you have to assume he has Jamie Dimon's respect.
So in these guys, Alex, just to bring you back in, you cover Berkshire Hathaway, you cover insurance. It's not operating in a vacuum. They work with the biggest banks in the world on a regular basis, and particularly JPMorgan and Berkshire Hathaway have had a pretty close relationship.
Yeah, indeed. As Sridhar said, Todd Combs was an incremental part of the discussion around the healthcare venture, and insurers and banks are two critical elements of the financial system, and they work together to get financing to the economy in different ways, but they do work hand in hand a lot.
Hey, that healthcare thing didn't really work out, did it?
No, they had to shut it down after a couple of years.
Why is it such a tough nut to crack? It's pretty easy,
because healthcare is massive, and it's complicated, and it's political, and it's a lot of things.
It seems like it would be pretty simple to solve.
Wow, someone take Matt Miller to Washington. It's pretty easy, the healthcare problem. Matt Miller, 2028.
Exactly.
GLPs for everyone.
Alex, one thing I want to ask you, what does Todd Combs bring to JPMorgan?
This investment acumen that has been developing over the years at Berkshire as a stock picker, he's going to be part of the deployment, of those billions of dollars in the economy. That's definitely a big asset for JPMorgan in that venture.
All right. One thing I also want to do, Shri, while we've got you, and we can continue talking about this, but Jamie Dimon, when he speaks anywhere, we're all like, whoo, kind of awake. He spoke in a panel at Reagan National Defense Forum. It was hosted by Bloomberg's Caroline Hyde, and he got into, the whole conversation was talking about defense globally and so on and so forth. But his point, bottom line, was about Europe and its problems. So I want to bring that to everybody. Listen up.
Europe has a problem. If we ever write a book about how the West was lost, it will be because of the following. It will be because of we didn't get our act together here, and we go through all the policies here, that we didn't have the strongest military in the world, and that we allowed Europe to fall apart. They have some wonderful things, but they've gone from 90% of the GDP of America to 65. That's not because America did anything bad to them. It's their own bureaucracy, their own costs, they do some wonderful things on their safety nets. But they've driven business out, they've driven investment out, they've driven innovation out. It's kind of coming back. If they fragment, then you could say that that America first will not be around anymore. It will hurt us more than anybody else because they are a major ally in every single way, including common values, which are really important.
All right, that, of course, was JPMorgan's Jamie Dimon at the Reagan National Defense Forum. Shri, I feel like when Jamie talks, we all listen. This was obviously a discussion about defense, connections between the U.S. and Europe, whether it's cockroaches, whether it's stormy seas, whatever. What Jamie says, we take note. How should investors read what he had to say, or what do you think is important there?
Look, at least from the business side of things, he's pointing out what any business executive will point out, that Europe is going through a bit of a challenge and the economic numbers show that. But his broader, bigger point about fragmentation in Europe somehow disbanding this whole America First idea, that's a hard one to follow. But more interestingly, it potentially goes against the kernel in terms of how the Trump administration perceives Europe right now. If you have followed all the commentary and the discourse over the weekend, over the last week. In fact, going back to the start of the year when J.D. Vance was at that Munich security conference and that diatribe against Europe, it's very clear that the Trump administration wants to take a tough stance on Europe. And Elon Musk was one of those who said Europe probably has to disband the European Union and it's much easier to deal with every country on their own and they will care for their sovereignty. But it seems to be a very interesting viewpoint that the Trump administration has taken that's counter to the worldview that has been adopted by the United States since the end of the Second World War.
A real change. Maybe he's running for president? All right.
No.
I'm going to get another eye roll. That's all that's going to happen. Shri Natarajan, Bloomberg News Chief Wall Street correspondent, and Bloomberg News U.S. insurance reporter Alex Rajbhandari joining us right here. When we come back, we're talking something else that's really important to the U.S., rare earths.
2:40 on Wall Street. I'm Alexis Christoforous. Traders are tapping the brakes on the recent stock market run-up ahead of this week's Federal Reserve meeting, where an interest rate cut is widely expected. But Wall Street now looking ahead to how many rate cuts, if any, 2026 will hold. The Dow is down 263 points at 47,693. The S&P 500 losing 33, and the NASDAQ Composite sliding about 83 points. Biggest winner in the S&P today, Paramount Skydance, as it brings its hostile takeover bid for Warner Brothers Discovery straight to shareholders. Biggest loser in the S&P, or among the biggest losers, Lululemon, down more than 4% ahead of its quarterly earnings report due out on Thursday. In other stock news, shares of PopMart International Group dropping the most in over 6 weeks. That's amid renewed concern that the Chinese toy maker's sales growth here in the U.S. is slowing down. And Unilever's spinoff of the Magnum ice cream company was valued lower than some analysts expected in its debut today, as the world's biggest ice cream company looks to revive its performance as a standalone firm. And JPMorgan Chase has hired Berkshire Hathaway's Todd Combs for a broad role that includes advising CEO Jamie Dimon and his top lieutenants on strategic issues, including plowing $10 billion into companies that will bolster economic security through direct equity investments. Once again, stocks are lower with the Dow off 267 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Back to Carol and Matt.
All right, much appreciated. Alexis Christoforous in for Charlie Pellet. Hey, right now, I want to take you to the nation's capital. Capitol and to the White House, the cabinet room. President Trump there surrounded by members of his team and others. This as the administration is planning to unveil a farm aid package offering some $12 billion in assistance to farmers hit hard by low crop prices and the impact of the president's tariff policies. In the meantime, as he does so, and he did do some, we actually have some headlines already crossed in the Bloomberg. The president saying he is using some tariff revenue for that farmer economic aid. He also says he thinks China will buy even more soybeans than promised. He said he did speak with Chinese President Xi very recently, and again, reiterating that he thinks he'll buy some soybeans. We're going to continue monitoring and watch for any headlines that come out of that, and of course, bring them to you.
I wonder why President Xi would buy more soybeans than promised. I mean, he's been so slow to buy soybeans.
He's been very slow
at all, and they've bought obviously soybeans from other places, so they have enough soybeans. Why would they buy more from us than they previously said? The
only reason they would do that if it was part of trade negotiations, right? And trying to figure out tariffs that maybe are easier on China, right? And so as part of the deal.
Yeah, but I mean, one of the biggest parts of the trade negotiations has been promising us access to their rare earth minerals, and they haven't really given us yet what they promised. So if they don't hold up that end of the bargain, why would they do this one?
Well, that's the back and forth, right?
Yeah.
No, I don't disagree. And I think this is why we all see these statements, but what's the reality of what gets done? Hey, Matt brought up rare earths, and that is something that we are talking about a lot this year. It's kind of the land grab, I feel, of the last year or so. We're talking about the world in a war of sorts to shore up their critical mineral assets. And just today, we saw the German foreign minister claiming progress in efforts to secure supplies of rare earths from China, saying the government in Beijing had indicated it would be constructive in handling European orders for the materials and the metals. The New York Times out with a story on how Japan built a rare earth supply chain without China. And then, of course, they're all, Matt, those public-private partnerships and investments that we've seen the U.S. government has been doing to build up its exposure.
Yeah, exactly. Investing in companies like John Paulson's company to
There's a lot of
mine rare earths.
Yeah, exactly. All right, so we want to talk to someone that we've leaned on big time when it comes to this space. Gracelin Baskaran, she's Director of Critical Mineral Security Program at the Center for Strategic and International Studies. She's with us from, I believe, from Washington.
Middleburg, Virginia.
Oh, oops. I need to read our chat every once in a while.
Yes, you do.
She's from Middleburg, Virginia. Hey, good to have you back with us, Gracelin, and here with Matt and myself. There is a lot going on, this land grab. I don't know, where are we in this process, and how do you make sense of some of the headlines that are going on? Are countries just kind of figuring out deals, and is, I don't know, extra production, extra exploration underway?
So great to be back. Thanks for having me. What a year it has been. If you had told me at the start of 2025 that rare earths would become the most powerful currency in negotiation, in reforming our geopolitical alliances, I wouldn't have believed it. You know, what we've really seen this year, and remember around the APEC summit, there were the third round of negotiations to restore access to rare earths. So we saw them in London, we saw them in Geneva, and then we saw them in South Korea. Since then, the U.S. government has really done two things. You've seen both that acceleration of domestic efforts with the Vulcan deal for rare earths to mine and process those rare earths and get some permanent magnets, but you've also seen a proliferation of the continued international efforts. So most recently, you saw during MBS's state visit from Saudi Arabia that the U.S. Department of War agreed to become a 49% shareholder in a refinery there. And what's really important is when you look at the spectrum of rare earths, we are continuing to drill into two things. Those heavy rare earths, right? Because here in the U.S., we have the second biggest producing rare earths mine in the world. However, they are pretty lightly endowed on the heavy rare earths. And we know that Saudi has bigger deposits of those. The second thing is we're really trying to build our permanent magnet manufacturing capabilities. We do not want to be held hostage any longer than we have to.
Yeah, I was going to say too late. I talked to Gracelin automotive executives a lot in my side gig here, and they have expressed real concern with the idea that we would ever process rare earth materials, that we would ever refine rare earth materials in the U.S., because a lot of these men and women who work for car makers have toured the plants in China and say, like, I never want to go back there again. I wouldn't let my family anywhere near there. It's such a dirty and dangerous job that we simply cannot do that in the United States of America. What do you think about that?
I don't think we have a choice, quite frankly. And I'm originally from Detroit. I love our auto manufacturers, but at the end of the day, it was the auto manufacturers that stopped manufacturing in May when they had a supply chain disruption. So what we know is that, having a close to home or at home supply chain is no longer an option. What I would also say to you is challenge the notion.
But what is the process like? Walk us through the process. What makes it so dangerous, so dirty? And by the way, if I have a vote, they're not doing it in New York, not in my backyard. So I don't know where it's going to be. Certainly not in your backyard. I would probably agree with that in New York. Now, here's the thing. You've got to mine those rare earths, and then the process of separation is very pollution intensive. You're talking about air pollution, wastewater, waste gases, et cetera, right? It is messy. But what we also know is that the Chinese way of doing it is not the cleanest way of doing it. Mining and processing today is much cleaner than it was 20 years ago. So when we look at, I was out at MP Materials Mountain Pass Mine, one of the really fascinating things is obviously this mine is in a desert. You have a lot of tension, particularly with the frequency of, droughts and wildfires on water. They have a completely closed loop water system that actually keeps all of that water within the mine. And again, that's not commonplace in China. So we're actually learning how to innovate and do it cleaner and better than the Chinese have ever been able to.
So in the land grab, if you will, when it comes to critical minerals, where is everybody at this point? I thought I recently saw a story about just how much the U.S. has progressed in this area in terms of lining up deals.
Absolutely. The U.S. has made a lot of progress. So I want to point to the fact that when we look at some of the bilateral agreements and deals that we've signed this year, you've seen these agreements being made and signed in the context of Japan, Australia, Saudi Arabia. You're seeing DFC financing, our U.S. government financing going to Brazil. Now, we're also accelerating our mining production and processing here at home. So these are all really big steps that we're doing. Are we going to be self-sufficient? Secretary Bessent said we'll be self-sufficient in 2 years. That's pretty unlikely. We have to remember we're activating a very long-term industry. 10 years from now will look very different. We're also not talking about a huge market. This is a small market. So 2 years is a bit overambitious, given how long the timeline to developing these capabilities is. But we are, this year is way ahead of where we were last year.
Gracelin, and as someone from Detroit, you know how important rare earths are in our automotive production chain. Is it possible to engineer them out somehow?
And just got 30 seconds.
Yeah, and we're starting to. If you look at BMW, they've produced the first engine that doesn't use rare earths, right? But the difference is, we're kind of getting to that nascent level of innovation, but to the point that we don't need them. Seatbelts, steering wheels, door panels, that's still quite a ways away.
All right, going to leave it there. Always good to check in with you. Thank you throughout the year. All the thanks. Gracelin Baskaran, Director of Critical Minerals Security Program at the Center for Strategic and International Studies. As we head to a break, President Trump in the cabinet room, U.S. Treasury Secretary Scott Bessent is there. The president talking about John Deere when talking about reducing regulations. This is about for the farming and agricultural community. He's also talking about using some tariff revenue for farmer economic aid. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
Hey, everybody. Carol Massar and Tim is out today. He'll be back tomorrow, but Matt Miller here. Quick check on the markets for you.
Come back. I will come back.
Promise?
And if Tim doesn't return, Carol.
Pinky promise?
Yeah, I'll be your co-host from now on.
All right. S&P 500 down about 31 points down, not quite 0.5%. NASDAQ 100, same thing, 112 points to the downside, down about 0.4%. I'm Carol Massar along with Matt Miller. Let's get to some stocks on the move on this Monday. With us is Bloomberg News cross-asset reporter Denitsa Tsekova. One stock we've been all talking about, ticker WBD.
Yes, let's talk about the future of Hollywood. The battle is heating up. Paramount Skydance launched a whole-style takeover bid. It's $30 a share. So the math here is very complicated, but this is obviously just days after the company agreed to a deal with Netflix. There are quite a few headlines going through a terminal all day. The latest one is Netflix co-CEO saying he's extremely confident it will close the Warner deal. Of course.
Oh, wait, a media executive confident?
Of course. What would he say? To be honest, it didn't move the price. Obviously, Paramount Skydance is up 7%, more than 7% today. The ticker is PSKY. Warner Brothers ticker is WBD, up 4.5%. And Netflix is down today, nearly 4%. So clearly, investors are picking right now.
This is something that I've noticed. Right. It's odd.
What?
When Netflix Netflix bid, and when it looks like Netflix can win, their shares fall. When Paramount comes in with a hostile takeover bid and it looks like they might win it, their shares soar.
Why it's fascinating. They've been penalized both days. I don't know, maybe between the close yesterday and the close today, investor got excited about the deal and now suddenly they're penalizing. But
People are worried about debt for Netflix? I mean, they have a pretty solid balance sheet.
I guess so. Maybe it's something they don't need. But as we said, the initial reaction was negative for Netflix. That said, Paramount is up, Warner Brothers is up, and the only loser of the situation seems to be Netflix.
You know who's not down with any of this? Senator Elizabeth Warren.
Yes.
Not happy. She said that a Netflix Warner Brothers proposed deal, she called that a nightmare at the end of last week. And today she says a Paramount Skydance bid is a 5-alarm antitrust fire.
Yeah, she doesn't like it.
Right.
Well, we'll have to see what it means for consumers, right?
For sure. There is also a $5 billion termination fee. So
both of them.
Yeah,
$5.8 billion from Netflix and $5 billion from
As you said,
Paramount.
Very
just
complicated.
Walk away. Take
the money.
Take the money. Where do you want to go next?
Let's go to Tesla. Much simpler story. Morgan Stanley lowered its target. Their equivalent, it's the equivalent of a hold. This is the first time it happened since June 2023. What they're saying is Elon Musk is transforming Tesla. It's all about robotics, artificial intelligence, but this is fully priced in. Tesla is down on the news. The ticker, of course, is TSLA. Big change from Morgan Stanley. Tesla shares trade at about 210 times projected earnings over the next year. The only stock that trades higher, Warner Brothers. So Tesla shares have largely shook off the slightest.
On the S&P or what?
On the S&P 500, yeah. The average price target is about $388. Morgan Stanley is actually higher. It still implies a 6% decline from here, but definitely not a too bearish take. The stock is up 10% this year, which is not bad, but compared to the years we saw, it was up 63% in 2024, 100% in 2023. So it's definitely not rewarding this high growth company that investors were super excited about. And of course, we've seen a big shrug in slides, a big shrug in profits this year. So that has been a big part of it.
Can I just remind everyone that Toyota, aside from Tesla, Toyota is the biggest car maker in the world by market cap. They have a market cap of $310 billion. The next biggest is Mercedes-Benz. Mercedes and General Motors are neck and neck at $70 billion. Ford is worth $52 billion. I mean, if you take every single car maker in the entire world, you don't even get to half of Tesla's market cap at
does that not make any sense
$1.4 trillion.
to you at all, as somebody who follows the car industry?
Well, it definitely tells me that nobody on earth is valuing Tesla as a car maker. So we make so much of a big deal about whether or not they're going to meet deliveries or not, you know, how much they make on the car business. That does not matter at all.
No, it doesn't. It never actually has, right? In terms of what this company is about. I mean, I don't even want to look at valuations and stuff. Hey, let's get to MSTR Strategy.
Yeah, that's another company where clearly it's not about the fundamentals. Strategy Inc. shares are up today after a very big sell-off. The digital asset treasury company said it bought more Bitcoin, $1 billion worth of Bitcoin at the start of December, the largest acquisition since July. The ticker is MSTR. The stock is down 60% from its peak in October. Really tough period. Just to give you an example, investors were really happy to pay premium. They were paying 2.5 times premium for its Bitcoin holdings, and that premium has almost disappeared. It's about 1.1 now. But at some point, they were saying that they will start selling, but we're seeing the opposite trend. They're buying more Bitcoin despite that premium sharply.
Isn't that just creating demand for your own product?
I guess so. But at a certain point it stops working, right? At a certain point it starts working. Although they have created the reserve, that's $1.4 billion. But analysts are soaring on the stock. Cantor Fitzgerald cut their price target, burned by 59% last week. So.
All right, we got to run. Denitsa, thank you so much. Check out Stock Movers Podcast, 5-minute episodes of the biggest winners and losers in the stock market. Find it on Apple, Spotify, or anywhere you get your podcast. If you're watching on television, the close coming your way in just a moment. Matt and I continuing right here on Bloomberg Businessweek Daily.